Well, if it's Friday, if it's 12 noon, it is the About Mansfield Consumer Advice Series, and we appreciate you being here today. Whether we're watching live on Facebook, whether you're watching the video replay on Facebook, on YouTube, on LinkedIn, whether you're listening to the podcast on any of the podcast platforms, whether it's Apple or Google or Pandora or Spotify or any of the major podcast platforms. We appreciate you being here with the About Mansfield Consumer Advice Series. Today, in fact, right now, because nobody likes giving the government money, especially when it's called taxes. Nobody likes paying their taxes on April 15th. And so with us today, he is our tax advisor expert, consumer tax expert, Adam Coen. Welcome back to About Mansfield.
Thanks for having me, Steve. I'm glad to be here. Happy Friday.
I was going to say it's Friday. Do you have big plans for the weekend?
Oh, I've got a marriage summit we're going to, so we'll see how that goes. My wife's taking me along. We'll see how that goes.
A marriage summit. Okay.
Yes.
All right. Good.
10 years of marriage. I guess we're gonna revamp what it is that we need to cover for making sure we've got a firm foundation in our marriage.
Excellent.
Yeah.
I think everybody should do that.
It's going to be good.
In fact, you and I next week, we may not do that live on the broadcast, but I will definitely ask you about it and see. I've been married 34 years, but yeah, maybe something that my wife and I would do.
I'll fill you in.
Okay, but we're not here to talk about marriage. We're here to
No,
talk
let's
about
talk tax.
pre-filing tax reduction strategies,
Right.
because again, we don't want to take a big chunk of change and give it to the IRS if we can take a little chunk of change and give it to the IRS. And so let's go and start with retirement accounts. Now, because it's January, it is the beginning of tax season. It's deductions, all of that is ended. That ended at the end of December 31st.
Right.
But let's talk about how late can I contribute to my IRA? What are the different types of IRAs and other retirement accounts?
Well, it's a broad question. Okay. So the most important question you have to ask yourself is, am I eligible to contribute to a retirement account? Then the question would be, is funding one of these retirement accounts going to be in my best interest? And have I conferred with my financial advisor? So all those things go into play. When we're doing this for our clients, we always try to confer with their financial advisor because we don't want to step on the toes of the person that's helping them get to retirement. But to that end, you have traditional IRAs, Roth IRAs, SEP IRAs, SEP IRAs. You have solo 401ks. You have traditional 401ks. All of these things and more that are out there as potential avenues for tax savings. So the most common one you'd hear about is a traditional IRA, which if you're under the age of 50, 2021's cap is $6,000 that you can put in and potentially deduct. I say potentially because there's all kinds of limiting factors. There's whether or not you have an employer-sponsored plan. What type of income did you earn, if any, during the year? Are you retired? So those all influence how much you can deduct. It's worth having that conversation with either your advisor or your CPA about what can I deduct and how much can I put in at any given time. But the IRA is a great tool. If you're self-employed, the SEP, SEP IRA is an even better tool. And those solo 401ks.
And that's what SEP, self-employed program?
No, it's actually Simplified Employee Pension IRA. Yeah. But you can call it a self-employed person's IRA. It really doesn't matter.
Okay. I always thought it was self-employed something. But
everybody thinks it's something different.
I'm not a tax manager, so I don't know. I'm just a layman. Is it too late to? So, for instance, if I don't have an IRA, Can I start one and still work on the 2021 tax season?
It depends upon the type of account. There are some accounts that you can establish at this point and fund backwards, especially with some of the recent legislation that's happened. And the other thing to keep in mind is for most traditional IRAs and Roth IRAs, your limit when we're talking about when we can contribute is April 15th. Some of these self-employed or solo 401ks, if you file an extension, you can have potentially until September 15th or October 15th, depending upon the structure of your business. And so the answer to that question is it depends, and it depends upon what you're trying to fund. And it's such a broad range. I can't give you an exact answer in that regard, but it's possible is the answer.
Okay. Now you talked about the age 50 and younger.
Mhm.
What's the youngest age someone can invest in an IRA?
That's a good question.
That's why I'm the host.
Yeah. Well, it's going to depend on a number of factors, but one of them is, did they have earned income during the year? So if they're, let's say, 16, 17, 18 years old, and they're earning a little part-time job, maybe they're making $8,000 and the employer doesn't let them contribute to a 401k,
Mhm.
they're very likely eligible to contribute into a retirement account, a Roth or a traditional IRA, depending upon the circumstances.
So if I get my 12-year-old son to mow my lawn and consistently, and I
Are
pay
you are
him,
you paying in?
yeah, is that so? That's not okay. Not
Is it true? Is it true income, or is it going to be, let's say, an allowance?
I don't
If
know.
well, here's the example, Steve. So let's
Okay.
say he starts out a lawn business. He's mowing your neighbor's lawns, and let's not say 12 years old because that seems excessive. But let's say 16,
Okay.
and he's out mowing lawns for all the neighbors in the neighborhood. And he makes a fair amount of money. He might make $1,000 in the summer or something. I don't know how much it goes for to mow a lawn, but yeah, he could contribute into a retirement account potentially.
All right. Let's talk about a different type of savings account, health
Yeah.
savings account, and how
Oh
late
yeah.
can I contribute to my HSA?
April 15th.
April.
April 15th. And again, the consideration on how much you can put in is dependent upon, are you even eligible to participate in an HSA, which is dependent upon the type of insurance you have, the type of insurance plan. What they look for, and they being the IRS, is, are you participating in a high deductible health plan? And if you are, then you'd be eligible in most cases to participate in an HSA. If you're a single person, it's $3,700 a year you can contribute. If you are a family plan, it's $7,000 a year. It's a triple tax net benefit. The money goes in as a tax deduction. It can grow tax free. It can be invested while it's in the HSA, and provided that it's used for medical and other related costs, including eyeglasses,
Hmm.
hearing aids, and braces and whatnot, it comes back out tax free. It is a great, great, great tool.
And for the layperson, in layman's terms, a health
Yeah.
savings account is
A medical, I don't want to say medical savings account because that was a specific type of account.
okay.
It is a directed savings account with tax advantages to it for health purposes.
All right. Is it a use it or lose it type situation?
No, that would be an FSA, flexible
Oh,
spending account. Yeah, and and there's caveats to that as well. But no, the HSA is a rollover indefinitely sort of thing.
all right. We
Yeah.
talked about young, uh, retirement accounts. We talked about up to age 50 retirement accounts. For those who maybe have a little more gray hair, are there any rules that are different for older taxpayers?
Yes, there are. If you're over 50, there's more money you can put aside for one thing.
Oh, good.
There's what's called catch-up contributions. So your maximum contribution you can put in is greater. If you're up to 70, believe that it is either it's still 70 and a half or it may be 72 now. There's going to be retirement contribution considerations for how much do you have to start pulling out and when. So from your IRA, there are minimum required distributions annually when you reach a certain age cap.
Okay. So if any 16-year-olds, 50-year-olds, or 72-year-olds, or anybody in between has any questions about IRA contributions, health savings account, or just taxes in general, Adam Coen, how can they get in touch with you?
Give us a call, 817-231-0666. Again, 231-0666. Or visit us on the web at the dfwtaxteam.com. We can help you.
I hope you and your wife have a great weekend.
I appreciate it.
We'll see you next Friday.
All right. See you Friday. Bye-bye.